What we've got is the #1 analyst and insights producer for the largest brokerage shop in the world by transaction count. Marcus Millichap has the most buyers and sellers of any brokerage company in the world, and their SVP of Analytics and Insights is the best presenter on commercial real estate economists that I've ever seen. If you don't follow him on LinkedIn, you need to, because his video production is amazing and his content is beautiful. It's something that you need to be tracking to stay ahead of the curve in your awareness. So, without further ado, let's give a round of applause. Back to the stage, Mr. John Chang.
Awesome. That was an amazing introduction by my good friend Ben. He may have gone a little overboard with it, but it was very good. I love it. You know, David just covered this whole economic thing, and boy, he covered a lot of territory. And I just want to say, everybody, it's going to be okay. It's all right. It's okay. This is a cycle. We go through cycles. Will we have a recession? Maybe. I see a lot of things. We look at the same data, David and I see things going a little differently than he does, which is great. We have to have a dialogue. He is the needle in the haystack who is still saying we have a recession coming. So maybe we will. But ultimately, at the end of the day, we need to keep our eyes on the horizon. Do we have a recession coming? We've been through recessions before. They create challenges, but we do have to keep our eyes on the horizon. Where are we going to be, not today, not tomorrow, but in 5 years? What are the things that are going to shape our business, commercial real estate, over the next 5 years? There are a lot of positive drivers. Today, we have more people employed in the United States than ever before in the history of the country. We see interest rates are a little challenging, but in the long term, they are in alignment with the long-term trend. We have to adapt as an industry, and we're going to have to keep moving. This is not as challenging as it looks, and I think the opportunities that we see shaping up over the next few years are going to be very strong. So, I have a little bit of a poll. I wanted to run this by you guys first before we got going. And so we have this poll. Please take a moment. And the question is, what is the most significant trend that will have the greatest impact on commercial real estate over the next 5 years? Now, I had this in Nuva, but we shifted the schedule around. We kind of lost the data, but we got to do it. We can do it live. So hopefully you take a minute and answer that question. We have technology and AI, demographics, what's happening with baby boomers and millennials. We have housing affordability. We have public policy, rent control, political discord, and we have deglobalization. And I'm going to talk about all 5 of these, but I'm curious, which one has the audience thinks is the most important? So how are we doing? Are we ready? Oh, we got a few votes. Up. Housing affordability? Is it starting to stabilize yet? No, not yet. No one saying deglobalization? 2 votes. All right. Interestingly, when I did this on Hoover, I had this up for a few days. AI was ranking at the top of the list, and technology. So, I'm going to get started here. I'm going to start diving in. Now, I remember, one of the things I've been saying, I shoot a video every week. And I go out, I post it on LinkedIn, it's on our marcusmillichap.com website. And when I was shooting those videos during the pandemic, and there was so much negativity, everybody thought things were going south, it was a tough time for everyone. And the thing that occurred to me is, real estate is a long-term investment. This is 5 years, this is 7 years. And we need to keep our eyes on the horizon. We have to stay focused in the future, because that's our exit strategy. That's where we have to focus our attention. What will things be like in 5 years or 7 years? Not, today matters, and the challenges of today definitely matter. But we get so focused on what's happening today, the pandemic, the CPI number that came out, the inflation risk. Will we be in a recession? Will we not be in a recession? What's happening with the 10-year treasury, even to 4 or 5? Where's it going? So now as we move forward, we got housing affordability, number 1, demographics, number 2, AI technology, number 3, public policy, and globalization came in last. So bear that in mind. I'm going to start in with the presentation. Let's shift over to the slides. And I want to start in with the technology and the AI. Will AI change the world? Maybe. Is it going to solve our labor shortage? Do we have Rosie the robot coming in and cleaning hotel rooms? We're not there yet. That's still some ways off. It's the Jetsons. I don't know. It's somewhere out there. Perhaps. But we're not going to solve our labor shortage with AI. What we are going to see is a lot of dislocation and displacement in certain industries. Mathematics, computer programming, law, appraisals, architecture, some engineering, doctors. So really, AI is coming for all of our high-paid professional jobs, right? Doctors, lawyers. We're going to have robot lawyers, AI lawyers. Is that really the future? Will AI take over everything for us, right? We got Wally here, and everybody's just going to be floating around in a little chair, drinking a Slurpee and watching videos. Is this where we're going? Is this where AI takes us? Or will AI just take over everything? Are we at Skynet, right? There's a lot of places this can go. What happens with the AI is going to be significant. And if you look back over time, there's a theory that was developed in the 1945-ish called creative destruction. It basically says technology continues to advance, and through that process, it destroys some things and some jobs and some parts of the economy, and it creates new ones. You had steam power and railroads. You have electricity. You have aviation and electronics. You had computers, personal computers. You had the internet. And now, as we go into the 6th wave, we have AI. Each sequential change has a more pronounced impact, and it also has a shorter span. But it takes time for these changes to come into effect. When you look at what Oxford Economics is saying, they anticipate it will take somewhere around 10 years for the full adoption and the full impact of AI to really be apparent. So we still got a little bit of runway here. We got time before we're all displaced by robots. We got a little time, so we can all take it easy. The AI thing is very interesting, but we really don't know where it's going yet. So when I look back, 5 years ago, somebody was talking about blockchain. They were saying, blockchain is going to change commercial real estate forever. Self-driving cars are going to change real estate forever. Bitcoin, we're going to do transactions, everything's going to be on Bitcoin. The metaverse is the next big thing. AI, online collaboration, e-commerce. Which of these have really impacted society as we know it? Which ones have affected commercial real estate most? The digital transformation in the center, online collaboration, and e-commerce. Those have had a big impact, and they're going to continue to really impact commercial real estate over the next several years. AI, maybe. Some of these other ones, I was looking at Waymo. It drives around Phoenix all the time doing cab service, but it's not ready for prime time. It's going to be, I heard somebody tell me it was going to be another 10 years before self-driving cars are really in use. So we still have a long ways to go with a lot of these technologies. They are overhyped in the beginning, but it takes years for them to be fully integrated and have a true effect on the economy. So, but digital transformation, this is real. And it was spurred on by the pandemic. It accelerated this cycle. All of a sudden, we all were all on Zoom, and we're all talking to each other over video calls. And we were also thinking about e-commerce. E-commerce shot through the roof during the pandemic. Things that we used to do in person. Play video games. We used to do that together. Now, you do it over the internet and your friend's in a different city. So you look at all these things, and the digital transformation has really had an impact on society and on the economy and on the real estate market. Now, historically, when you have a major disruptive force, you see a huge increase in productivity. Following World War II, we had the aviation, electronics. Productivity in the United States went up to about 3% per year, and it held there for about 2 decades. When we had personal computers and the internet come online in the early 2000s and really take hold, we saw productivity rise to 3%. Right now, we're about 1.6 on average, and we're seeing an upward trend. Will we get there this decade? Perhaps. Perhaps, like Oxford Economics says, this digital transformation, the AI powers are still a ways off, and we'll see it next decade. But we're moving in the right direction. Productivity is on the rise, and technology is very important. You look at e-commerce sales, we have that momentum. We see that big jump during the pandemic. It leveled off, but we're falling back into alignment with that upward momentum and that upward trend. You look at in-person work, and that's way down. Used to be 5 days a week, now 3.5 days a week. Interestingly, according to McKinsey, the number of days per week people go to the office is strongly tied to the size of their company. Really big companies, people tend to go to the office less often. Very small companies, they tend to go more frequently. That's why we're seeing most of the weakness in the office sector in the urban core, the downtown office towers, and not in the suburban areas. So there's a dichotomy emerging there. But that also unlocked mobility. A lot of people relocated as we went through the pandemic, as the digital transformation took hold. They were moving to Florida, they were moving to Texas, they were moving to California. But we also saw people moving out of Florida and Texas and New York. So at the end of the day, some states won and some states lost. California, Oregon, Illinois, New York, a few others lost some population. Texas, Florida, Idaho, Utah, Nevada really gained population, right? And we saw the builders and developers pursue this. They saw this trend, and they all moved down, and they all built in Texas and Florida, and that's why we have those supply drivers there that are affecting all the different types of property. But we see that these changes are having a real effect on commercial real estate. And they're going to continue to have that effect as digitization continues to take place. So, technology, big deal for commercial real estate. AI, probably not so much, not right now. We still have to see. Now, the next one, demographics. What's happening with demographics? Here's all the population broken up into age cohorts. We have Gen Z, we have millennials, we have Gen X, we have baby boomers, right? But let's just talk about the ones that really matter, right? The millennials and the baby boomers. Those are the big age cohorts. 71.6 million baby boomers, 72.2 million millennials. Those are the ones that are really driving things right now and will continue to have an enormous impact on commercial real estate as we go forward. And remember, we're all thinking 5 years from now, right? We're all keeping our eyes on the horizon. We're all focusing on where we're going, right? Skating to where the puck will be. And so we have to think forward. You look at the baby boom generation. Think about this for a moment. 11,000 people, baby boomers, will retire each day this year. That's a lot of people. It's going to have an enormous effect on real estate. When you look at the chart on the left, that is the population by age today. The one on the right is the population by age in 5 years. And you see something really important happen. The blue bars, which is the baby boom generation, moves over so that they're all going to be on the right of the orange line. That's the average age of retirement. We're going to have all of the baby boomers move into retirement age. And what does that mean? What does that mean for commercial real estate? First of all, think about this. As those people retire, what skills and knowledge are they taking with them? I was at a conference with the National Association of Home Builders, and they were having a conversation about the aging of their key personnel who are their best plumbers and tradespeople, their best carpenters, and they were all aging into retirement. And they're not backfilled. They're not backfilled very well. So we're gonna have some challenges there. We have a lot of people in agriculture, other services, financial services, public administration, but we have all of these sectors that over-index with a lot of baby boomers that are going to move into retirement and they're going to lose some of that knowledge, some of those skills, and that's going to be a hindrance to the economy going forward. But you also have to consider that as people age, they use more medical services. You know, but until you're about 45, you go to the doctor maybe 1 or 2 times a year. After that, it starts to accelerate. When you get to 65, it bumps up to 5 times a year. When you get to 75, it's 6.5 times per year. They use a lot more medical services. Now, over the next 5 years, there will be 15.5 million more people who are 75 years old or older. The number of people who are going to be 65 or to 74 years old is going to increase by 6 million. And when you consider they're all going to the doctor more often, that's a lot of doctor visits. So medical office, which is, you know, kind of buzzing along right now, we're going to be severely undersupplied in medical office over the course of the next 5 years. And the same is true for seniors housing. 81% of the people in seniors housing are going to be 75 years and older, and we're going to have 15.5 million more of them over the course of the next 5 years. So we see that momentum happening, and those are trends that are baby boomers are going to affect our economy as well as commercial real estate. But what about the millennials? Millennials are key to the housing market right now. When you look at the left, that's where we are today. On the right, where we're going to be in 5 years. And what happens? The peak of the millennial generation moves past the median age of the first-time home purchase. Now, a lot of people have been saying, oh, home prices are going to drop. House prices are falling because, I don't know, they have all these different reasons. The silver tsunami, too many young adults, men hiding in the basement of their parents' house, which is kind of true. But that's not going to affect it because the women are all gainfully employed and they're going to go buy their own house, damn it. But the point is, they're moving into that age. The demand for housing is the strongest it's ever been. Single-family homes are doing actually very well. The price of single-family homes continues to rise. I'm going to talk about that in a moment. And as I said, there are a lot more people living in their parents' basements. It's way above average. It's way above the standard historically. What are we at? 32.4% of the people between 18 and 34 are living with family. That's 4.2 million above the long-term average. And that average went way up following global financial crisis. But when I look at that, what I see is pent-up household formation. Those are people who will, at some point, get kicked out of their parents' basement and have to go find an apartment or a house. I just kicked out my son. He's like, you go do something else. And he's doing great. So this is one of the key things. We have a lot of housing demand that is pent up from the millennial generation. They're going to drive economic growth. They're in the peak, they're entering their peak earning stage of life, and they're entering their peak spending period of life. So even though we have a lot of barriers and risks to our economy, when we look at the millennial generation, we still see a huge demographic cohort that is going to be earning more over the next 5 years and is going to spend more over the next 5 years and is going to want more houses over the next 5 years that is going to help fuel economic growth. Maybe there's a recession out there, but there is a chance we could dodge this. I still believe that myself. So, now, housing affordability, what's going on there? Home prices are at a record high. A lot of people thought they were going to go down. They did. They kind of went down a little bit when interest rates went up, but they have pretty much stayed stable, and now they're going back up again, and they're at a record high, even though interest rates are up. Why is that? Well, that's that millennial generation saying, hey, it's okay, we're going to buy a house. Look, when I was in my 20s and 30s, I wanted to go buy a house. The interest rate on a home loan was 8%, and we figured out a way. right? Interest rates came down, we're all the winners. Refinance, lock in at 3%, 2%, 4%, whatever it is. Now there's no inventory coming up on the market, limited supply, we're not building enough houses. The demand is still there. This is part of the thesis behind the single-family rental market and the build-to-rent market, because people understand that the millennial generation wants their own place. They want the backyard. They want a place for the kids to play. They want to have a community with no common walls. And that's why they're going to rent those houses. And those have done pretty well. They're just hard to get out into development and completed. But those have generally done pretty well. But home prices have gone up so significantly, it's a challenge to produce that inventory affordably for people. When you look at the difference between the payment on a median priced home today and the average rent, it's over $1,300. That is the greatest spread we've seen in the history of our country. That's a big gap. That is a huge affordability barrier that is going to retain more renters as we go forward. That's going to be a challenge for society, and that's why we hear so much about rent control these days. But the fact is housing affordability hasn't been a rental problem. Rents have only gone up relatively modestly compared to the price of houses, single-family home ownership, and that gap is going to restrain a lot of people and hold them in the rental market for much longer. And on top of that, the prices are so high relative to household income that only about 25% of households will be able to afford a home, a median priced home, according to Freddie Mac. That's only 25% can get the loan. So again, this looks really positive for the housing market. We do have a structural shortage of housing that has remained stable. It's right around 3.5 million housing units. It has not come down. Even though we're building record numbers of housing units right now, at least multifamily, we're not seeing that number come down. And the reason is because we have some immigration, we have population growth that is going to build up at the same time as we're building more housing units. And so we still have a housing shortage. I don't see that going away anytime soon. So we have that housing shortage out there. That bodes well for the housing market multifamily space. Fourth, okay, this is a little contentious. Public policy. I'm not taking a side, but I want to point out that the way politics are today is really, really challenging, right? So the 2020 election results, basically 50-50 split. It's divided, and it's really, really challenging to get things done when it's a really even split and you're not working together. We just got our 2024 budget completed in March. It was due in October. I don't know about you. If I have something due in October and I turn it in March, I kind of get in trouble. But that's where we are. Now, the next budget is due in October this year. I don't know how they're going to get there. We already got rid of one House Speaker because he went out and created a part of a budget. And now the next Speaker is threatened because he finally put a budget together. This is a problem. I'm not taking sides here. What I'm saying is that dysfunction is unsettling. It creates uncertainty, and it makes it more difficult to make decisions. The Fed, interest rates higher for longer. They were actually slow on the draw. They came in a little bit late. They started raising rates a little too late, and it got away from them. But they got aggressive. Oh, yeah, they did. We all noticed that, didn't we? 300 basis points in like 150 days. Those were good times. But theoretically, they're going to come down. Hopefully, they're going to come down sometime this year. I don't know. The odds just changed this morning. Maybe two reductions this year, maybe 3, maybe 1. The fear is that there are no reductions or they don't move rates down and they hold them too high for too long and actually cause the recession. That actually is a real risk. So we have that challenge out there. Honestly, I can't tell you how this is going to land. What I can say is Chairman Powell said we're going to start lowering rates before inflation hits 2%. Right now, core PCE, not CPI that came out today, core PCE, which is what the top metric that the Fed is watching, right now, core PCE is at 2.8%. It has been trending lower every month. So if core PCE, that's the one you want to watch, core PCE, if that keeps going down, we will still get those rate cuts this year. So keep an eye on that. Public policy, rent control. Quite frankly, they're talking about putting rent growth restrictions on high-tech properties on a national basis. We see what's happening with states that, in green here, that don't allow local municipalities have rent control. The green ones, 11 of those states are facing challenges on those rules. Now, Arizona, where I live, that's really not going to fly. It's not going to happen. Massachusetts, on the other hand, really could get rid of their restrictions on rent control, and we could see rent control emerge in Boston. This is a real challenge. Every real estate organization out there says this is a terrible idea. Virtually every economist is saying this is a bad idea, but public policy is running the wrong direction, and this is going to be a risk for multifamily investors. This is definitely something we want to pay attention to as we keep our eyes on the horizon, as we look forward 5 years. When we look at immigration and immigration policy, another challenging conversation that people just really don't want to solve. The politicians just don't want to solve this issue. This was a major challenge over the course of that budget dialogue through the first quarter of the year that did not get resolved. And when you look at it, immigration really started going down in 2016, okay? And it fell all the way down to almost nothing in the pandemic in 2020. The United States is a land of immigrants. The United States has a history of growing the economy through imported labor, okay? We import labor, they go to work, they help us grow the economy. When we reduced immigration, we saw the labor shortage shoot up. We had not enough workers to fulfill the needs of our economy to grow. It slowed economic growth and it created inflation. So this is one of those things we want to keep an eye on. What happens with immigration? What happens with the number of people legally immigrating to the United States? I'm only counting the legal component right here. It's going to be a big part of the economy over the next 5 years, something we need to pay attention to, because if we have labor shortages, that slows our economic growth and it causes wage inflation, makes hiring people more difficult. So that was number 4. Number 5, deglobalization, right? This is another challenging topic. I don't know if you guys are really paying attention to this, but there were shortages in the latter part of the pandemic, right? We ran out of stuff. When you look at the cost to ship a container from China to the port of LA, before the pandemic, it was about $1,400 per container. That was pretty consistent. It stayed there pretty much the whole time. In 2021, the cost to move one container from China to the US had gone up to $19,200. Huge increase to bring goods to the United States. That was a real challenge. That was inflationary. This is part of why Chairman Powell thought it was transitory. He was like, look, the supply chains are all jacked up. That'll get fixed. Everything will be back to normal. It'll be okay. But there were other things in play that he didn't factor in. But the fact is that those costs went way up, and that was inflationary. That was a big problem. Companies couldn't get what they needed. Retailers couldn't get what they needed. People couldn't get what they needed. Costs went up. There were shortages. It was a problem. But then we got through that. The supply chains ironed out until a couple months ago, they started shooting, Houthi rebels started shooting missiles at container ships in the Red Sea. That stopped or slowed down the movement of goods through the Suez Canal. We also had a drought at the Panama Canal, which reduced the flow of traffic through those two choke points in our transit system of goods around the world, and that caused those container prices to start going up again. Will they stay there? I don't know. But the thing is according to a study done by McKinsey & Company, 42% of businesses are saying, we're done with this. Let's figure out a better solution. Shipping a container around the world to bring goods to the United States is probably not the best strategy. Let's find another plan that is easier to manage, that is more reliable, that is more durable, more flexible. And so last year we saw a tipping point. The import of goods from Mexico exceeded the import of goods from China. That's a big change. Labor costs in Mexico are actually cheaper than they are in China, and it costs a lot less to move the goods here because you can put them on a truck and drive them over. When you look at the shift in transit and movement of goods, you look at the ports across the Texas border, El Paso, parts of Arizona, California. Those ports are all doing very well. They have more and more goods coming across. They're expanding them very quickly. And those supply chains are going to reroute all of those goods coming into the United States. Also, Detroit, with things coming in from Canada, seeing a big increase. As those supply chains shift, it's going to affect warehouse space. It's going to affect housing, job creation. It's going to affect retail in those markets. So that's something that we're looking forward. When you look forward 5 years, this starts to have a big effect. So that's one of the big things that we see happening with supply chains and deglobalization. It's a lot easier to put something on a truck and drive it a few hundred miles, 300 miles from Monterrey, Mexico, where all the manufacturing is, up into San Antonio, right? It's right up the road. Or you can go by sea, go in through the port of Houston, as opposed to loading it up on a container ship and shipping it all the way around the world, a transit that takes several weeks. So as we go forward, think about this a little bit. Where are you investing? How are you investing? Which properties are you focusing on? How is it going to be affected by deglobalization? How is it affected by technology? How is it affected by demographics? Right? We keep focusing on short-term things like, where are we going to go? What's happening with the 10-year Treasury today? It went up 15 basis points. It's shot over there, or this is going over there. But really, where is real estate going to be in 5 years? In 5 years, in 2029, and you look back, man, maybe I should have bought more in 2024. Maybe it's not about stay alive till 25. Maybe it's I should have bought more in 24 because over the next 5 years, the economy went through its cycle. We went into the next growth cycle, and the demand drivers for this type of real estate have increased so dramatically that I generated a huge profit. Commercial real estate is organic. It evolves. It changes. Looking forward, when you look forward 5 years, it gives you a whole different perspective than when you're looking at today and tomorrow in the headlines that you see out there right now. So look forward. Look forward at your exit strategy and build back into your strategy for today. Figure out where your opportunities are, how to line them up. I know financing is a challenge. You're going to figure it out. We always do. We always have. We've always figured these things out. The gap between buyers and sellers, it is narrowing. Marcus Millichap helps more investors buy and sell real estate than any other company out there, and we're helping people bridge that gap. And as that happens, the opportunities will come. Just remember, commercial real estate investors absolutely need to keep your eyes on the horizon. Thank you.
Hey. John Chang, everyone.
Thank you.